With that, let's move on and welcome our market master into the conversation. Okay, I think we're still waiting for our market master. Gautam Shah is going to be with us, and it'll be good to sort of talk to him about levels because we're in blue skies and this market is moving on serious momentum. So what do you do? The only problem with that is, just to go back to the point on banks, look at this. HDFC Bank is still a drag. ICICI Bank is still a drag. Kotak Mahindra Bank is down about 0.25%. So that one piece for the market is missing. The other major leg from an index point of view is IT. And that's a stop and start. It's, blinks red, blinks green. One day you have a good IT day, and then it doesn't have a follow through. So that's been the problem with the other major pillar of the market, which is IT. Gautam is with us, so let's ask him how to navigate this. Gautam, great to have you on. So tell us, it's been an absolute phenomenal ride. Elections have come and gone, and exit polls have come and gone. And all-time highs are still here, despite banks still not firing away the way people would want them to. Let's start with your index call first. Do you think this good going can last?
Good morning. I think it's the kind of market where you don't need to apply your mind too much. All you need to do is just to control your emotions. I think that's the kind of bull market that we have been in for the last 6 to 8 months, because every single dip has been bought into beautifully. Local and global developments have been handled wonderfully. And I think the market is as strong as ever. As a technician, I always look out for overbought signals or topping signals, but even at current levels of 23,500, I don't see any such signals on the charts. In fact, after what happened on June 4th, I do believe that the market is internally and structurally even more stronger. And I think we are going to see much better days ahead, and the best is yet to come. Now, in terms of levels, these are blue sky territory levels, and therefore it's very difficult to pinpoint numbers. But, I always believe that the trajectory is more important than the magnitude. So the idea is to just ride this. But still, as a technician, if I have to put in some numbers, I think the next stop for the Nifty is around 24,100. But if I have to look at it more medium term, I think the platform or the foundation has been set for the Nifty moving towards a level of 25,000. And now with the underperforming stocks like HDFC, Reliance, and IT coming back, I just feel that it just makes the market a lot more stronger on an overall basis.
Okay, so this 25,000 target that you have, Gautam, do you have any kind of timeline that you're looking at? And the most common question that at least I get asked by a lot of investors is that, is it a good thing to buy even when the markets are at record highs? Because a lot of retail investors feel like they've missed out on this rally. What is your advice to them?
Well, I think in terms of timeline, I think the Nifty is going to grind higher. I think that's really been the case for the last 12 months. Even if you look at the last 6 months, we haven't done anything special. We started the year around 22,000. Today, we are at 23,500. So in percentage terms, we actually haven't done as well as, the screen might indicate. But I do believe with the election event out of the way, global markets very strong, Fed likely to cut rates over the next a few months, and the liquidity being extremely strong, I think all of these factors will take the Nifty towards 25,000. And I think by the end of the year, I think it's a fair assessment to expect the market to get there. I do believe that retail investors have participated to a greater extent because, passive money is still very active. Maybe active money has not been able to do as well because the markets have been very volatile and behave like a pendulum. But I think even at current levels, there are many pockets in the market, that give you great opportunities. So if you keep looking at the Nifty, you'll feel scared or you'll feel uncomfortable buying the market. But I do believe pockets like banks, metals, pharma, FMCG have a lot of value and technical strength and can be bought even at current prices.
Okay. Hi, Gautam. Good morning. Good to hear the 25,000 mark. But you briefly mentioned banks. Where's the Nifty bank headed? We're at 50,000.
Nigel, I think we put out a very big call in our big picture report that we released at the starting of this month. And we made a point that the Bank Nifty is setting up for a 10,000 point rally over the next 6 to 12 months. So I'm actually looking at 60,000 on the Bank Nifty. Now, you might say what's going to trigger it? I think stocks like HDFC Bank will trigger it because the stock is coming out of 3 years of underperformance, and there is a very high probability that this stock, HDFC Bank, can actually go up to lifetime highs and well beyond. And it will be ably supported by ICICI Bank and SBI as well. So I think I like the entire banking pack. I think if the Fed and if interest rates were to go lower and if the charts were to discount that much in advance, I think banks is really one place to be in because the risk reward is excellent. And my fundamental analyst tells me that from a valuation perspective, banks are still quite cheap. So yes, banks could be one of the trade of the next 3 to 6 months. risk reward is excellent, valuations are good, and the money is flowing in because people are coming out of a phase of underperformance.
Got it. So banks could be the trade for the next 3 to 6 months. Got that, Gautam. Now, since you're sounding really optimistic on the market, let's ask you about the other part of the market where you see it and yet there is a sense of fear because these stocks have been shooting up non-stop for about 12 months. Maybe that's what bull markets are all about. You already know what I'm asking, Gautam. Your HALs, your Garden Reach ship, shipbuilder, all of these defense stocks, there's simply no gravity. There's the correction around that election period was maybe 7, 8, 9%, and then now they're shooting back up again. Because either you have FOMO if you're not riding this trend, or you just sort of have to let it go, stand by, watch, and say it's not for me. What's the advice?
Well, Surabhi, I think at some point of time you have to let go, and I think we've come to a point where the momentum and the fashionable PSUs can be book profits into. I think with what has happened in the last 1 week, I don't see any confirmation on the charts to say that they will keep running at these levels. But there are many structural PSUs in the metal space, in the power space, in the infrastructure space, which I think still have a lot of leg on the upside, because they are still under-owned and they're still trading at single-digit PE, and I think the upside potential is large. So I don't think this is a time to be really committing into defense or railway PSU. I think that's a very clear call, even though I might miss a little bit of upside, but I don't think one should be chasing these stocks. On the other hand, the likes of Power Grid, NTPC, NMDC, ONGC, SAIL, NALCO, I think all of these stocks have a lot of headroom on the upside and can be committed into even at current levels. But I think since a lot of underperforming stocks and sectors are making a comeback, I think fertilizer looks very interesting. Paper looks interesting. The entire auto ancillary space, looks very, very interesting. Sugar has made a very good comeback. Focus on these pockets, and I think you will be rewarded with a very good risk reward.
Okay, what about autos? We've been talking ad nauseum about how stocks like M&M are hitting record highs and huge moves coming in, both on the fundamental and the technical front. Do you think there's still more legs to this rally?
No, I think they will get into a consolidation phase. I think the auto index is a little overdone at these prices. If you look at the weekly charts, we don't get the comfort that they can keep running. It's been a vertical move, for the index and for most of the top stocks. While we continue to like Escorts and Eicher Motors, and I feel it can deliver supernormal returns even from here, the other top auto stocks should not be looked at. On the other hand, I think the auto ancillary space, and with the likely entry of Tesla into India, I think there is renewed strength in the last 2 weeks. And I think the screen and the charts are indicating the same. So more than the top auto stocks, I would look at auto ancillary. I think that's a mega theme which is developing and is likely to see far greater upside.
Okay, Gautam, have a great day. Thanks a lot for joining in and speaking to us. By the way, the market is consolidating. It's not this runaway rally like we saw in the last 2 weeks, just sort of buying time around these levels. 23,500 is where the Nifty is. The Bank Nifty, by the way, has slipped a tad bit into the red, so maybe you could get some volatility there. But